Hey there, traders and investors. Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. If you guys have been watching these videos, we typically do a short to medium term option swing trade, either doing a debit spread or a credit spread and just trying to capture a short-term move. In today's volatility, I want to address what's happening in the market, talk about what we see longer term, same conversation that I've been having with my subscribers, which my business is geared towards the short to medium term trade, but we also have a lot of subscribers who need our help with the longer term picture. So here's what the S&P has been since 2016. Okay, we have quite an impressive uptrend here, and what you're going to see is we've got several touch points of this trend line. And whether it's individual investors or corporate investors or wealth funds or HFTs or algo funds or whoever's pulling the trigger, whether it's individual investors or whether it's programs. So what they're watching is while the market stays above this, let's call it uptrend line, they're saying the bull trend or the expectation of positive future economic activity is in place. Well, what just happened? We just broke through that uptrend support, and we're doing so with quite a vengeance here. So you could say that the anticipation of economic activity is beginning to decrease. This is a very positive leading indicator, because again, anybody who has any real money who can move the market along is certainly using fundamental data and paying a lot of money for future studies that we might not necessarily have access to, even as wonderful as CNBC is. So looking at that price action is very important to discount what might happen in the future. So how far down could the stock market go with everything that I said? Well, here's what we see as reasonable. I think a retest of the 2018 lows is entirely possible. Now, for those of you who are fully invested and you have your money in, you say, well, I don't want to take profits because I don't want to pay taxes. I'm fully in. I understand that. You just got to ask yourself the question, if the market were to drop down to, say, 25.50 or 25.75, that'd be 125 to 150 points, even 175 points lower than where we are now. What would that mean? If you could look back then and say, I wish I just sold, paid the taxes, and then able to reestablish on the downside, is that a choice you'd be willing to make? So I just want you to think about that. Now, we really need to hold these lows from early 2018. So that's going to be right here at about 25.45 area right there. Now, if we don't hold that, let me bring out something that's very possible. Let me pull out this study. What we're going to do is just look at what percent of the rally from 2016 could be recaptured. I'm going to show you that 2500, 2550 area, that's very significant, okay? It's the first retracement level plus the 2018 low. This is a very possible stopping point. I have cash, okay? I'm invested, but I have cash, and I'm sitting on cash, and I've been waiting for an opportunity like this. For me, I'm going to deploy cash down into that level. Now, I'm not going to just put it in and just hope and pray. The market's got to show me that it wants to resume the trend. So as I scroll out here a little bit, typically I get a little bit nervous if the market were to drop below the 50% retracement of what we've added to the S&P since 2016. So if 2372 starts to give way, I'm going to begin to lighten up and exit some of that position that I established at 2500. Okay, so it's a long-term plan. If the bull trend's intact, I'm a little concerned about this trend line breaking, but this is a very good cluster of support. So we really need to hold here. I will deploy some cash down into that level. If we get below 2372, then I think retracements much deeper, 23, 22, even 2000 is possible. So that's my plan going forward. Whether it's right or whether it's wrong, it doesn't matter. You have a plan. And I think to attack these markets is like a chess game. You got to be thinking several steps ahead. Trade with a process, trade with a plan, which eliminates your emotion or minimizes the emotion and takes that energy that you're inevitably going to feel in the market and puts it to good use. If you're reacting, sitting back on your heels, then that creates a bit of an issue. So that's my plan going forward for future volatility in this market. For CNBC's Trading Nation, I'm Todd Gordon. I hope that that piece of analysis helps kind of calm some nerves and give you some context around what's happening right now here. It's certainly interesting. So put your helmets on, get ready, be sure to tune into CNBC, stay tuned on what's happening here, because we can help you kind of navigate and interpret what's happening with this possible end of a historical bull market. See you guys next time.